Welcome to a new analysis of tradomics. In today's video, we are gonna focus on PayPal. So I waited a little bit in order to analyze PayPal back again because I was waiting the latest moves after the triggering point of the earnings release. For those of you that are already familiar with the channel and those that are not really familiar with the channel, you know that whenever there is a mistake or whenever something is not fitting exactly what I was saying, I have no problems to say that the layout of the chart was wrong. The intention here is, as every technique and methodology, is to approximate market moves and try to be as much precise as possible in order to better understand the future direction of the price and give some statistics and calculation regarding how long the price can keep going on the uptrend or the downtrend. And this can have a competitive advantage over other techniques like technical analysis to understand at any point in time what are the possibilities to keep a trend on the upside or on the downside, which is a significant advantage over the other techniques. And this you can have, so that awareness you can have at any point in time, every day. And you can also apply the technique for the intraday charts, so every 15 minutes. So after this triggering event on the earnings release, um, I had to review a little bit the layout, especially for the upward cycles. So basically, what has happened regarding the upward cycle is the following. So from this top, we have had the yearly upward cycle T plus 5 that has done a first upward T plus 3, then a second T plus 3, then we were saying that in the last analysis, this was the beginning of a T plus 4 because we add all the condition to begin a T plus 4 here, and especially the number of candles below this top, and also um, violation or break of a level of key price like this one or this one. But what happened is that from this stop, after the earning release on the 13th of April 2024, we have started retracing. But after this spike, we have started retracing even more harshly. So at that particular point in time, I was wondering whether the layout was correct or not. And in fact, I found another reading point or a reading layout that now I'm going to show it to you. Basically, if we gauge the total duration from the top of the T plus 5 to this top on the 22nd of January 2024, we have had 121 bars. To this top, we have had 166 days, which is basically close to the maximum duration, 168 days of a T plus 4. So basically here we could have had also the beginning of a T plus 4, but from this top to this top, we have had another upward cycle. And the top in which the cycle ended was higher compared to the top from which the cycle started. And if we gauge the total duration, we have 23 bars. So 23 bars is a T plus 1 H hybrid. So it belongs to a 2 weeks cycle. And this T plus 1 is basically a Bayer tongue. So the Bayer tongue is an extra time of a 3 degrees less encompassed between two wider cycles. And in this case, happened between a first T plus 4 and a second T plus 4, which is the first T plus 4, which should have closed here, plus this T plus 1 and the second T plus 4. And that's why here we have had the first T plus 2 upward cycle and then a retracement that was basically falling over the moving average 200 period, also breaking this low and breaking this low and even breaking this low. So that's the new layout on PayPal. And for the rest, basically what we were saying during the last analysis was we had to complete a first T plus 2, then a retracement to begin another downward cycle, T plus 1, T plus 2, and then back up again. In that case, as the T plus 4 was here, we were obliged to return back to the tops. But now with this new layout, we are not obliged to go back to the tops and go beyond this level, which is at $70.66. So it's the first key message of this analysis. Now let's have a little bit more understanding over the short and midterm. So here we have at the first T plus 2, and now we are on the second T plus 2. Thanks to this stop, now we can consider close the new T plus 2, which is the second T plus 2 of this T plus 4. And from here, we can actually give birth of a T plus 3, because first T plus 2 and then second T plus 2 can give a T plus 3. The duration now is 64 days, even if we can also extend the duration until 89 days. So until the 5th of September. So the T plus 3 can also have another upward cycle that can close basically around this area, and then close of the T plus 3, and then beginning of something new. Beginning of something new means that we are about also to have a median duration of a T plus 5. Because this T plus 5 has now reached a total duration of 260 days. So we might have also this other upward cycle. And here it depends whether the price will go back and break this top at $66.30. And then the beginning of something new, which might be also T plus 5. If we then have a look at the downward cycle here, we have a total duration of 196 days, which means that the downward cycle has definitely less days compared to the upward cycle. It means that the upward cycle is stretcher compared to the downward cycles. Therefore, we have more probability first to close the upward cycle and then begin a new T plus 5, which also will allow to close this downward T plus 5 cycle, because here we have less days compared to the downward cycle. Therefore, we might expect to begin or to close the T plus 4 and then begin a new T plus 5. Now, whether the cycle will be like this, or the cycle will be like this, or the cycle will be like this, is something that at the moment we don't know. But we can always check the swings by applying the swing trading, which is encompassed in the T cycle analysis. And we can say the following. So first of all, here we have the beginning of a T plus 1 or a T plus 2, and this upward cycle has lasted at the moment 6 days, which is the minimum duration. So therefore, for the beginning of the next week, we can have still high probability to at least have another day or other 2 or 3 days if we want to reach a median duration on the upside. Okay. Even if the minimum duration has reached, so we have let's say one possibility out of 6 to start having a new cycle, but the rest, 5 possibilities, 5 out of 6 is to go to the upside. So this is the more probable direction for the beginning of the next week, which might be also the opening with a candle that is, or with a level of price that is higher compared to the top that reached yesterday. But then also be careful, because when we will start reaching the top, then we have to close also this T plus 1. And the T plus 1 require at least a couple of days on the downside. Okay, so we can extend the rally at most until Friday, 16th of August. Considering a median duration, we can extend the rally until Monday, 12th August, Monday 12, or Tuesday 13th of August. And then we have to close this T plus 1, at least with a couple of days with a red bars. And this is also explained by the fact that with this weekly downward cycle, we have reached 5 days. So then towards the end of the next week, we will see this retracement. Once we complete this shape, then we will have to monitor whether this swing will be or will not be broken. Because if this will be broken, then we might have more time to go to the upside. At the moment, this is a T plus 1, T plus 2, because we have had uh, 7 days lower to this top. So therefore, if we break this level, then we might have more possibility to stretch this T plus 4 and continue to the upside in order to allow also the closing of a T plus 5, okay, upward cycle. But it's not given by fact that we're going to go up to this point or up to this level or up to this level, because now we have also the conditions to have this T plus 5 completed. So there might be also the possibility to have this shape and then start retracing, because here we have 245 days and we have also already 29 days, so a T plus 2 that can complete a T plus 5, even if it's a little bit stretched. So if we want to have really a nice shape, given that we are on a neutral T plus 5 upward and downward cycle, I might expect a little bit more climb to the upside before starting a T plus 5, okay? So this is the forecast on the short term, statistically speaking. Then the second thing is to watch carefully this high at $66.30 and then subsequently to this one. If we start retracing harshly, then one of the first key price level would be this at $58.75. So if you have on top questions or suggestions and so on, feel free to release some comments. And of course, if you haven't done it yet, if you want to be notified regarding all the latest analysis that we issued on a regular basis, please subscribe to our channel. Thanks for watching and see you to the next episode.